Welcome to the GSMC Financial News Podcast, the show that delves into the ups and downs of the stock market, changes in the economy, and news from the worlds of real estate and technology. From breaking news on the New York Stock Exchange, NASDAQ, or the overseas market, to updates on the bond market, if there's money to be made, we've got you covered. Hello and welcome to the GSMC Financial News Podcast, brought to you by the GSMC Podcast Network. I am your host, Sarah, and it is Tuesday, March 31st. It's the end of March. It is the middle somewhere of physical distancing, depending on where you are. I don't know what day you might be on. I honestly have lost track. It's kind of hard to keep track of the days, and that's okay. Please stay home to flatten the curve. For those of you who are essential workers, thank you so much for everything you do, from saving lives to keeping stores open to basically just making it so that we who are staying home can stay home. You are all truly heroes, and I greatly appreciate you. So we are here to talk about some financial news happening in the world, most of it pretty much affected by the coronavirus, as you can imagine. We'll start, as we usually do, with the stock market, which ended Tuesday's session, that's today's session, lower, closing out the worst quarter for the Dow since 1987, and its first 3-month start to the year on record. Yep, wow. So the Dow dropped 23.2% for the year to date, the most since the 25.3% drop seen during the fourth quarter of 1987. The S&P 500 posted a 20% decline, while the NASDAQ dropped 14% over the first 3 months of the year. Stocks have swung widely over the past several weeks, in particular, with today's losses erasing some of yesterday's steep gains as the coronavirus death toll in the U.S. topped those reported in China for the first time. Separately, overnight, better than expected manufacturing sector data from China suggested the country was beginning to recover some economic damage from the outbreak. A day earlier, stocks had risen after a smattering of positive healthcare developments helped blunt some fears surrounding reports of a still rising coronavirus case count, extended stay-at-home orders, and strained hospital infrastructure in the cities hit hardest by the outbreak. Johnson & Johnson said yesterday it planned to begin human tests of its coronavirus vaccine by September, and Abbott Laboratories recently unveiled a 5-minute coronavirus test. Still, both the human impact and business disruptions due to the pandemic have continued to mount around the world. The number of coronavirus cases topped 838,000 globally as of today, including more than 177,000 here in the U.S. This is according to Johns Hopkins data. Some lawmakers have already been pushing for more fiscal stimulus just days after passing that $2 trillion economic relief package. JCPenney, Macy's, Kohl's, and Gap became some of the latest major public retailers to announce major furloughs as storefronts remain closed. Companies from Domino's Pizza to Planet Fitness and L'Oreal recently suspended their respective 2020 financial guidance as uncertainty over the duration and magnitude of impact from the coronavirus outbreak linger. Amid these developments, many analysts believe further volatility is ahead for equities, with some predicting a choppier W-shaped or slower U-shaped rather than a V-shaped recovery. Others, including those at JP Morgan Chase, suggested risk assets could start to stabilize from here. As equities, at least temporarily, take a breather from a sell-off earlier this month, investors turn their attention to oil, which recovered some losses Tuesday after a precipitous decline during the prior session sent West Texas Intermediate futures to the lowest level since 2002. Still, the commodity clinched record monthly and quarterly drops by today's settlement. Moving on, although still in the same general area, the Fed's Loretta Mester says to expect, quote, some really bad economic numbers before things get better. The coronavirus crisis, is going to push unemployment past 10%, but it may not be as bad as some forecasts, Cleveland Federal Reserve President Loretta Mester said in a CNBC interview today. Recent outlooks have seen the St. Louis Fed estimate the jobless rate to as bad as 32%, while Goldman Sachs this week upped its prediction to 15%. Mester said the final number is likely to fall somewhere above 10%, though likely not as bad as the upper range. She said, those numbers are not out of the range of possibilities, according to our own forecast at the Cleveland Fed. How things play out really is going to depend on the course of the virus. Investors will get a better, though still incomplete, picture of just how severe the job loss will be when 3 key data points are released this week. ADP will put out its monthly count of virus payroll gains Wednesday. The Labor Department will follow with weekly jobless claims Thursday and then put out the non-farm payrolls tally Friday. Last week's jobless claims number showed 3.3 million new filings, pointing to losses unlike the U.S. economy has ever seen. Mester said right now, in terms of the repercussions, we've actually told people to stay home, close your businesses, and that's the right thing to do given the severity of the situation we find ourselves in. So it's not unrealistic to think we're going to see some really bad economic numbers coming out of that in terms of unemployment claims, in terms of people not being on payroll, losing their jobs, in terms of economic activity declining. Mester said she's not sure how long the economic slowdown will last, only that it will depend on the course the virus takes and how well preventative measures work to contain its spread. She said the downturn is, quote, not a typical recession in that it occurred in an otherwise healthy economy that was deliberately brought to a near standstill to fight a disease. Part of the goal now, she said, is to offer the kind of lending and making sure the financial markets stay liquid and making sure they stay on a firm foundation and then bridging people from the economy, which in February looked very good, so that when we get back to the other side of this, the economy and economic activity can come back. A key part of that will be to get banks to provide funding to businesses and individuals, which Mester said they are eager to do. She said one of the things that makes us in a better spot than some other countries is that our banking system was strong coming into this. One of the other actions the Fed has taken is to really encourage the banks to continue lending. Mester was the only federal open market committee member to vote against taking the central bank's benchmark interest rate to near zero. She said she does not regret that vote as she viewed it more important to get markets functioning properly again. Another expert, Jeffrey Gundlach, says the coronavirus sell-off will worsen again in April, taking out the March low. Double Line Capital CEO Jeffrey Gundlach, Gundlach, believes that the coronavirus sell-off is not over yet and that the market will hit a more, quote, enduring bottom after taking out the March low. He's quoted as saying, the low we hit in the middle of March, I would bet that low will get taken out. The market has really made it back to a resistance zone, and the market continues to act somewhat dysfunctionally, in my opinion. Take out the low of March, and then we'll get a more enduring low. The S&P 500 tumbled into a bear market at the fastest pace ever as the coronavirus pandemic caused unprecedented economic uncertainty. The equity benchmark hit a 3-year closing low on March 23rd, more than 30% from its record high reached in February. Last week, the S&P 500 enjoyed its best 3-day rally since the 1930s, making some investors wonder if the worst is over. Still, the market fell again on Tuesday, pushing the S&P 500's quarterly losses to 20%, its worst first quarter ever. The so-called Bond King compared the current stock rout to the ones in 1929, 2000, and 2007. He said that during the 1929 sell-off, the market went sideways for almost a year, and then the economy worsened again. So not really some great news. He said earlier this month that there's a 90% chance the United States will enter a recession before the year is over due to the coronavirus pandemic. Not encouraging, but not terribly surprising given the current circumstances that our world is in. So we'll see what other people say, what their predictions are, but that is one prediction from one person in the market. We're going to go ahead and take our first break of the podcast. When we come back, we'll be moving on to more financial news stories in the midst of the coronavirus. So stay tuned. You're listening to the GSMC Financial News Podcast, and I will be right back. As we go into the break, I want to talk to you about Birch Gold Group. In 2008, as we were just mentioning, the U.S. national debt was $10 trillion. Today, it's over $23 trillion, and it's rising like a hockey stick. If you don't think we're sitting on a house of cards, you're living with your head in the sand. But since you're listening to this podcast, you are clearly intelligent and smarter maybe than the average American. So what is your plan? As one of the dealers of physical precious metals in the United States, Birch Gold Group helps Americans diversify their savings with gold and silver. Customers can purchase for physical possession or convert a portion of their IRA or 401k into an IRA backed by physical precious metals. Can you afford another hit to your retirement like the last downturn when the S&P dropped 50%? You can hedge against inflation and hedge against uncertainty and instability with precious metals. Gold is a safe haven against uncertainty. Thanks to a little-known IRS tax law, you can even now move your IRA and eligible 401k into an IRA backed by physical gold and silver. It's perfect for those who want to protect their hard-earned retirement savings from any future geopolitical uncertainty. If you look back historically, when the bottom falls out of everything, gold tends to safeguard savings. So if this is something that you are interested in pursuing, you can contact Birch Gold Group to request a free info kit on physical precious metals. See if diversifying into gold and silver makes sense for you. This comprehensive 20-page kit reveals how gold and silver can protect your savings and how you can legally move your IRA or 401k out of risky stocks and bonds and into a precious metals IRA. To get your no-cost, no-obligation kit, go to birchgold.com/finance. That's BIRCH gold.com/finance. Are you a business owner? Someone interested in the latest news that might affect your business? Then check out the GSMC Business News Podcast, a show dedicated to keeping you up to date on all things concerning business, technology, and the stock market. Get a head start on the day as we keep you updated on the latest goings-on Wall Street, money, jobs, and technology. The GSMC Business News Podcast has you covered. Welcome back to the GSMC Financial News Podcast. Our next story involves U.S. gas prices, which, if you've been to the pumps lately, you know have been a lot lower than they have. And, now when we can't really drive anywhere, but that's okay. U.S. gasoline prices are below $2 per gallon on average for the first time in 4 years. I live in Northern California. They are not under $2, but I know that they are other places. As the coronavirus outbreak wreaks havoc on global markets, U.S. consumers are catching a break in one area, and that is at the pump. For the first time in 4 years, the national average for a gallon of gas is below $2, AAA said Tuesday. At $1.99, the average price is 18.4% or 45 cents lower than 1 month ago and down 70 cents or 25.8% year over year. The drop in prices comes as oil demand has evaporated with the pandemic halting travel and shuttering businesses worldwide. Crude prices have been pressured further in anticipation of a coming supply glut as oil exporters, including Saudi Arabia and Russia, prepare to ramp up production in April. The hit to supply and demand has sent crude prices tumbling to their lowest level in nearly 20 years. West Texas Intermediate crude is on track for its worst month on record after dropping more than 53%. For the quarter, WTI is down 67%, the steepest quarterly decline since the contract's inception in 1983. A recent poll from the Washington Post and ABC News found that roughly 9 in 10 Americans are practicing social distancing and staying home, thereby significantly cutting back on demand for gas. My quick workbook on this suggests whereas last April we spent $1.1 billion a day on gasoline, I think this April we're looking at $350 million a day. We're going to be saving $20 billion on gasoline this month. This was from Tom Kloza, Global Head of Energy Analysis at Oil Price Information Services. AAA expects prices to keep declining, with the national average falling to $1.75 or less in April. The association said gasoline can be found for under $2 per gallon at 68% of all U.S. service stations. Across the country, state averages are less than $3 a gallon, except in Hawaii, where it's about $3.36, and California on average $3.05. Today, 29 states have regular gas price averages under $2, with Oklahoma at $1.55 having the cheapest in the country. This is from AAA. And wow, these prices are just making me a little nostalgic. I'm trying to remember where I was living and what I was doing the last time gas prices were this low. Continuing with the story, though, of course, more and more Americans staying home also means that consumers are not enjoying the benefit of low gas prices nearly as much as they usually would. You know, that's kind of a catch-22. Lower fuel prices are also not likely to be a boon to the economy, Bank of America said today. The firm found that between March 17th and March 24th, spending on gasoline fell 37% year over year. Usually the lower prices would allow people to utilize the additional money in their pocket by driving more, spending on other discretionary goods and services, paying down debt, or building up their savings, the firm said. But with people staying home and avoiding discretionary areas, the money won't flow back into the economy the same way. Bottom line, according to Bank of America, the outbreak is causing a meaningful shift in the consumer basket, and lower oil prices are unlikely to be the jet fuel for consumption that they would be in a more normal environment. Our next story is on consumer confidence, which you can only imagine is, tumbling, and that is the case. It is tumbling in March as the coronavirus cases surge. Direct correlation there. A measure of U.S. consumer confidence fell sharply in March as people grapple with the global coronavirus outbreak. The Conference Board said Tuesday its consumer confidence index dropped to 120 this month from 132.6 in February. To be sure, the print was better than the 110 number economists polled by Dow Jones expected. According to Lynn Franco, Senior Director of Economic Indicators at the Conference Board, consumer confidence declined sharply in March due to a deterioration in the short-term outlook. The intensification of COVID-19 and extreme volatility in the financial markets have increased uncertainty about the outlook for the economy and jobs. March's decline in confidence is more in line with a severe contraction rather than a temporary shock, and further declines are sure to follow. More than 800,000 coronavirus cases, as we mentioned earlier, have been confirmed globally. That is, again, from Johns Hopkins University. of those cases. We're around 170,000 here in the United States, depending on what time of the day you're checking the numbers. Italy also has over 100,000 confirmed cases. Countries around the world, including the U.S., have taken measures to curb the spread of the virus. However, those actions raise concern over a potential economic blow and have sparked massive market volatility. Goldman Sachs economists expect the U.S. economy to contract by 34% in the second quarter and U.S. unemployment to surge to 15% before the fastest ever recovery takes place. And as we've said before, the S&P 500 has tumbled more than 20% from record levels seen in late February. Let's go ahead and take that second break of the podcast, and when we come back, we'll be wrapping up this episode of the GSMC Financial News Podcast, so stay tuned. Do you work in the world of marketing and advertising? Are you a media buyer or the owner of an agency? Have you been looking for a podcast to help stay on top of all the goings on of those worlds? The GSMC Marketing News Podcast is dedicated to keeping you up to date on all things concerning marketing and advertising. Get the latest marketing news, from what major businesses have planned for the coming year, to the newest trends in advertising, from podcasts, digital and streaming, to the old standbys of radio, television, and billboards. The GSMC Marketing News Podcast has you covered, whether you're a marketing agent or a business trying to expand your brand. Welcome back to the GSMC Financial News Podcast. We have covered a lot of stories in this episode relating to the economy and how COVID-19 is affecting the economy and the stock market and life in general. Our final story is on a slightly different note, and that is that JP Morgan has started mandatory diversity training for managers after discrimination allegations. So it's not good. Well, it's kind of good news, but not good news. But let's take a break from all of the coronavirus specific news, shall we? So JP Morgan Chase said it was instituting a mandatory diversity and inclusion training for its managers after a December New York Times article detailed racial discrimination at a branch in Arizona. The bank, which admitted to failures tied to the report in January, said today in a staff memo it has targeted several areas where it could improve its culture and processes to prevent more incidents from happening. That includes diversity training for all of the bank's 257,000 employees, with special training for managers, the New York-based lender said. Because the role of the manager is arguably the most critical role in promoting our culture deep into the organization, we will make additional manager training mandatory at the time of promotion to a people manager role and at the time of promotion to a senior leader role, in addition to other developmental moments for managers, the bank said. We know that it is essential for managers to be inclusive leaders, and we will focus on helping them recognize ways they can be intentional about inclusion as they recruit, hire, retain, and develop diverse talent, the company added. JP Morgan, the biggest U.S. bank by assets, also said it was improving the ways it takes in employee complaints, bolstering hiring programs, and simplifying how customers find products and services. In the New York Times article, a black JP Morgan employee and customer experienced racial discrimination by managers at branches in the Phoenix, Arizona area and had made audio recordings as evidence. In one case, the customer had difficulty attaining private client status despite moving $100,000 to the bank. We are all the keepers of our culture, and we are committed to ensuring that ours is one where all employees and customers are treated equally and fairly, and where all of us receive the opportunity and mutual respect we deserve, the bank said. Well, we will see how that training goes. Hopefully it moves things in a better direction. Unfortunately, we still face too many forms of discrimination in the world and in our country today. So, the news is not awesome around the world in terms of financial news, but thank you for tuning in, and join me again next time for more financial news, and I am sure more updates on the coronavirus. Thank you so much. Please stay safe. Please stay home. Please help flatten that curve. Thanks. You've been listening to the GSMC Financial News Podcast, part of the GSMC Podcast Network. You can find this show and others like it at www.gsmcpodcast.com. Download our podcasts on Apple Podcasts, Stitcher, SoundCloud, and Google Play. Just type GSMC into your favorite podcast app to find all of the shows from the GSMC Podcast Network. From movies to music, from sports to entertainment, from business news to weird news. Please subscribe to the podcast and follow us on Twitter and Facebook. Thank you, and we hope you've enjoyed today's podcast.